Welcome to InvestorHubX.com. Most traders lose money on double tops and double bottoms. Why? Because they trade the pattern, without understanding the pressure behind it. They see two highs, they short, they see two lows, they buy, and then the market crushes them. A double top is not just two peaks, it's exhaustion, it's trapped buyers, it's momentum shifting. A double bottom is not just two bounces, it's seller failure, it's absorption, it's structure building underneath price. In this video, I'm going to show you why confirmation is non-negotiable, why the neckline break changes everything, why the retest is where professionals enter, how to execute trades using multi-timeframes. No guessing, no gambling, no emotional entries, structure, confirmation, execution. If you've been getting trapped on reversals, this lesson will fix that. Let's get to work. This is Bitcoin on the daily time frame. What we are looking at here is a double top pattern. Price pushes up, forms the first high, pulls back, and then pushes up again to form the second high. After the second high, price starts to move down. This reversal point here, this swing low between the two peaks, is what we call the neckline. The neckline is important because it represents the last support level in the uptrend. Now watch carefully. Once price breaks below the neckline, we no longer have higher lows. Price is now making a lower low. And that is the key. A lower low confirms that the trend has shifted from an uptrend to a downtrend. This is where traders look to enter short, not at the second peak, but after confirmation. In this case, once the trend line breaks and structure shifts, that is the high probability entry, because we are no longer guessing a reversal. The market has already confirmed it. Now let's talk about the pullback entry. After price breaks the neckline, most beginner traders enter immediately. But professionals often wait. Why? Because markets rarely move in a straight line. After breaking support, price often comes back to retest the neckline. And this is important. What was support now becomes resistance. This pullback is the market testing whether buyers still have strength. If price rejects the neckline and fails to break back above it, that confirms sellers are in control. Now think about the structure. Before the break, we had higher highs and higher lows. After the break, we made a lower low. During the pullback, price attempts to make a higher high, but fails. Instead, it forms a lower high. That lower high is your confirmation. This is where high-probability traders enter short, not because they hope it drops, but because the structure now clearly shows lower high, lower low, downtrend confirmed. This entry usually gives better risk to reward, smaller stop loss, less emotional pressure, because you are trading with confirmed structure, not against it. This is chain link on the daily time frame. Here we can clearly identify a double bottom formation. Price pushes down to form the first low, bounces, then returns to the same area to form the second low. Notice something important. On the second test, price fails to break significantly lower. That tells us selling pressure is weakening. Now the swing high between the two lows creates the neckline. This level represents the last resistance in the downtrend. Once price breaks above the neckline, structure shifts. We are no longer making lower highs. Price prints a higher high, and that is the confirmation. The trend transitions from a downtrend to a potential uptrend. This is where aggressive traders enter long on the breakout of the neckline, because buyers have regained control. Now let's talk about the professional entry. After breaking the neckline, price often pulls back. It retests the previous resistance level, but this time, resistance becomes support. If price holds above the neckline and forms a higher low, that confirms strength. This is the pullback retest entry. It is more conservative. It offers better risk to reward, clear structural confirmation, reduced emotional entry. Instead of buying the breakout blindly, you are entering after support proves itself. Now let's look at copper. We're starting on the monthly time frame, and here we can clearly see a double bottom formation. Price declines, forms the first low, rallies, then returns to test the same major support level. But notice something important. On the second test, price fails to break significantly lower. That tells us long-term selling pressure is weakening. This is not just a short-term bounce. This is structural support on the monthly time frame. When a double bottom forms on the monthly chart, that is macro structure. That matters. Now here's where we refine the entry. We drop down to the daily time frame. Because the monthly gives us direction, the daily gives us timing. On the daily chart, we wait for structure to shift. Specifically, we wait for a break of the downtrend line. Why? Because once price breaks that trend line, it signals momentum is shifting. This is where we enter long, not just because we see a double bottom on monthly, but because the daily confirms buyers are regaining control. So what are we doing here? Monthly time frame gives us bias. Daily time frame gives us execution. This is how you align structure with timing. High time frame direction, lower time frame confirmation, that's multi-time frame precision. To summarize, double top and double bottom aren't just patterns, they signal structure shifting. Wait for confirmation, trade the retest, align time frames. That's your trade. If you found this lesson helpful, please give the video a thumbs up, subscribe to the channel, and turn on notifications for future lessons. I'll see you in the next video.